Assalamualaikum everyone, greetings of peace and welcome. This is Iman Ali. I'm consultant at DinarStandard and your MC for today's roundtable. This is Insights Brief number 3 in our OIC Economic Outlook series on the US-Israel-Iran regional crisis. And today's focus is Islamic finance, banking, sukuk, funds, takaful, the financial rails, and de-dollarization. Let's go over the agenda. Here's how today will run. There will be a brief brief findings report, the findings from the brief led by Rafi-uddin Shikoh and Najmul Kawsar, 2 short polls along the way, a panel discussion, and Q&A at the end. Before we dive in, let me briefly introduce you to our today's panel. Professor Dr. Mohammed Kabir Hassan, Professor of Finance, University of New Orleans, ISDB, a prize laureate. We also have Professor Dr. Mehmet Asutay, Director, Durham Center for Islamic Economics and Finance, ISDB, prize laureate as well. Ahmed ElBohy, Office Manager to the Secretary General, Economic Intelligence and Strategic Reporting, AlBaraka Forum for Islamic Economy. Monem Salam, Director, Portfolio Manager, Saturna Capital. And of course, our dear Rafi-uddin Shikoh, CEO and Managing Director at DinarStandard, our moderator for today's panel. The next slide, please. As you can see, this is the third in the series. Brief number 1 covered the macro framing across all 11 OIC clusters. Brief number 2 went deep on food and agriculture. Both are fully accessible for you on the interactive dashboard. We will share the link to the dashboard shortly on the Zoom chat, so do take a look if you've missed the earlier sessions. And of course, along the way, feel free to drop questions in the Q&A box anytime during the session, and we'll be happy to address them during our panel and during the Q&A session. Since today's focus is Islamic finance, it's a USD $5.9 trillion sector spanning banking, sukuk, funds, and takaful. We look at each segment to separate immediate market shocks from longer-term balance sheet stress and outline strategic options for OIC governments and institutions. Without any further delays, I'd like to now hand it over to Mr. Rafi-uddin Shikoh and Mr. Najmul to walk us through the brief findings. Thank you.
Great. Thank you so much, Iman. Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. It is a real pleasure to have you on. Thank you for spending your time with us on this very important topic that is in front of all of us as the Islamic finance industry and ecosystem thrives in various aspects and also addresses the various challenges. It's structural challenges, market challenges, national level concern-related challenges. We are today faced with an unprecedented global crisis, which is at the heart of the Islamic economy markets, and Islamic finance being the engine of the economies of the OIC. It's certainly very important that we address the role or impact on the Islamic finance ecosystem to the US-Israel-Iran war that is happening. As Iman mentioned, we have been conducting various areas of focus, and today we are covering Islamic finance. What I wanted to start with is, what is the question we're answering today? As you'll hear from Najmul and myself, in terms of our short assessment, and this is a initial assessment of how we see the war impacting Islamic finance and what are the strategic options. Our thesis is that the immediate crisis is already being addressed by governments and various stakeholders as a crisis response, as an immediate crisis response. finance is a very unique ecosystem and industry. As we know, when the February 28th event happened and the subsequent closure of the Strait of Hormuz, it triggered the largest oil supply disruption in modern history. So energy was the primary and is the primary economic driver from which cascading effects originated. For finance, the shock now runs through the system itself in bank margins, sukuk refinancing, sovereign fiscal restraint, takaful, and other aspects of the ecosystem. Every aspect has been affected one way or the other. This is what our brief will examine. But we're not looking to evaluate the immediate crisis option, but more what are the medium-term, 1 to 2 year, and long-term strategic options for OIC government agencies and corporates in the Islamic finance ecosystem to achieve economic stability and growth amid the US-Israel regional crisis. We have a very comprehensive methodology that we have followed, and when we share the presentation, you'll have all the details. One of the first things we did as part of this assessment, as we all know, the crisis has been quite fluid. And even today, even as the ceasefire or the MOU, so to say, had been signed, we know that the situation is still relatively fluid. We evaluated 3 core scenarios. The first of which was that a ceasefire happens, it holds, and that the trade route reopens. In which case, either way, we believe that there will be a new normal in which we're not ever going to be back to what it was when it comes to trade relations and intra-government relations and various economic and political aspects that existed before this crisis started. But we would settle into a new normal, new alliances, but we hope and we expect that the new normal is as a result of a ceasefire that will hold. The other is scenario, a civil unrest that happens in Iran and then has a resulting domino effect across the region, or a protracted war which will have the most severe impact when it comes to the impact of the crisis across the OIC. Today, where we stand, we feel we are towards the ceasefire, although, as we all know, it's still a bit flaky. But our analysis is based on the assumption that we're working towards a new normal and a ceasefire. Okay, so with that, I'm going to pass it to Najmul, who's going to share with you our insights on implications for Islamic finance.
Thank you, Brother Rafi-uddin, for setting up the context and the file that we are going to walk through today. So in the next few minutes, I will try to cover 4 things. So where the industry stood before the crisis hit, how the shock is moving through it or has moved through it, what it did to each segment, and what to do about it or what we can do about it. So starting with the shape of the sector. So Islamic finance is basically, we talk about around 4 parts. There are other nuts and bolts, but these are the main 4 parts: banking, sukuk, funds, and takaful. And banking is the largest segment. It comprises 72% of the industry assets. And here, this is the dashboard. So this dashboard, as we have seen in this thought leadership series in the previous 2 editions, we had an interactive dashboard which you could play with, which you could customize based to your liking. And we have this for this edition as well. And if we can just go to the dashboard view now through our screen share. Yes, so this is the dashboard that you see. So this dashboard, this is the home version, the one that you usually see. And then if you click on enter dashboard, you'll be able to go to the Islamic banking, Islamic finance one, and you can play around with it based to your liking. So now we will move back to where we are in our slideshow, and we will share with you the full link to the dashboard at the end of our presentation. So now coming to the Islamic finance one. So layered on top of those 4 main segments sits the digital Islamic fintech layer. And Islamic fintech is small, about 198 billion based on our latest global Islamic fintech market report. But it's growing, and it's growing faster than the overall Islamic finance industry. And this is growing at a double digits. And this is something that we take into consideration when it comes to our strategic focus and strategic levers. Now, here's the lens for the whole talk. So the shock that we are talking about, stemming from the crisis, it's hitting through two channels. The first is systematic market prices, and it usually arrives within weeks and sometimes within days. And we have seen the sukuk yield went up 5-year high, equities went down, war risk premiums went up at record level. And the second is systemic. So it builds through balance sheet stress over years, weaker loan quality resulting in, or weaker financing quality resulting in weaker asset quality, and the refinancing. While we have seen multiple sukuk from UAE and other countries nearing default. So this is something that is affecting us. So now, this is how the Hormuz Strait closure and surrounding event is reaching each segment. So for banking, we have seen oil revenue falling down. So the defending the dollar peg is lifting up cost, because the GCC countries, they are pegged to the dollars. So this is raising cost for them. So this is resulting in margins being squeezed, more provisions being needed. For sukuk, it's the risk of pauses, new issuance, and this is forcing a refinancing wall. For funds, the regional equities sold off. We have seen in the first week, Tadawul went down by 12%, Dubai went down by 17%, the indices. So what happens is the real assets are slow to liquidate. So this is something to be mindful of. For takaful, the strait turns into a war risk zone. We can see the premium risk jumped, and the net result is for the 4 segments. For banking and funds, the results are mixed. For sukuk and takaful, the results are mixed. So for sukuk, we have seen the investors with excess liquidity, they are starting to find new markets like Nigeria and others. So this is a silver lining. On the flip side, we have seen for takaful, the demands went up for more coverage. So this is something, to take in mind of when we take into consideration the growth opportunity. But as you can see, that the picture is not very rosy. Now, the exposure is concentrated. We have 3 countries, Iran, Saudi, and Malaysia. They hold 72% of global Islamic finance assets, and the Gulf is the center of gravity. And in 17 countries, Islamic banking is over 15% of the market. So that means a shock to the Islamic finance industry or Islamic banking industry will transmit or spill over to the overall banking and finance industry. Now, if we go segment by segment, starting with sukuk, 3 headlines: new issuance slowed, investors diversified into a new market, and asset-backed structures, they faced a real test, according to S&P. Now, one of our findings is that at the peak of the crisis, total sukuk issuance almost fell 47%. And almost all of that damage hit in one place, which is the dollar market. So for 2 weeks around the closure of Hormuz, almost no single USD-denominated benchmark sukuk were issued. In the meantime, the local currency markets, Malaysia, Indonesia, Turkey, kept issuing sukuk. So this is something that we found out as an interesting finding. So now for the funds, 3 headlines. Values move fast. So we're seeing that Saudi market, it shared about 300 billion in the week 1. The sovereign funds, they move more slowly. So the risk, because they have to move slowly and they have to force to liquidate some of the assets to compensate for the fiscal deficit. But the real assets are hard to liquidate in a hurry. Now, one of the questions that sometimes investors ask is that, does the Sharia screening protect people or investors? And the answer is, for this particular crisis, it depends on the benchmark. So against a broad global index, we have seen the Islamic version. So the broad global index being the Dow Jones Global Index, and the Sharia counterpart is the Dow Jones Islamic World Index, DJIM. So it fell less and was less volatile. So this is something that they can speak of. But for the S&P 500, which is a tech-heavy index, that is Sharia counterpart, which is S&P 500 Sharia, the findings are mixed. We have seen it fell more and swung harder. So the reason being, to our understanding, is that because this screening, it's screening out banks and highly leveraged industry or financial entities. So this is pushing into the S&P 500 is already heavy mega cap technology, and we know that mega cap firms, they are prone to volatile ups and downs. Now, the banking, the biggest segment, it was hit in 2 waves. The defending the peg raised funding costs and squeezed margins. Second, as growth slowed down, the asset quality weakened. So the offset is a resilience story. So Islamic banking, since by principle they avoid leverage or speculative lending or financing. So the first wave hit is lighter. But since they have a smaller scale, so if the crisis is prolonged, if the shock is longer, they have lesser of a cushion to withhold on. Now for takaful, we have mentioned that the war risk prices spiked, marine premiums went up several fold, capacity got tight, and the demand is still increasing. Now the pivot. The crisis didn't just do damage. It exposed four precise and critical vulnerabilities based on our understanding. And what we can do from our side is to tackle each of them directly. So one is a dependence on dollar rails, as we have mentioned. And Prof. Mehmet will talk about this later. So we tackle it by building settlement sovereignty. Two is refinancing pressure. We tackle it by making capital markets crisis-proof. Three, the war risk capacity gap. And we tackle it by pulling risk across the OIC. Four is concentration. We tackle it by spreading and connecting the base. So four vulnerabilities, four levers, and we try to give answers to each of those. So now those four levers become 8 options, each with a near-term move and a longer-term build. So let's go group by group. So for settlement sovereignty, we have de-dollarized settlement and an OIC payment union with a digital currency. Resilient capital. For resilient capital markets, we have crisis resilient sukuk and capital market integration. For risk pooling, we have a takaful war risk pool and liquidity infrastructure. For an integration, we have social finance buffer and an agri-finance link, which we have mentioned in our previous brief. So let's just focus on a few. It's 2 for governments, 2 for corporates. So for governments, first, de-dollarized settlement is key. They can pilot non-dollar corridors like mBridge now and build an OIC settlement network over time. Now, second, the social finance buffer. So they can mobilize zakat al-waqf as counter-cyclical relief now and make it a permanent stabilizer over the course of time. For corporates, the first could be the crisis resilient sukuk, issue war resilient liquidity style sukuk first, and deepen local currency demand so they are insulated from the dollar freeze. Second is the takaful pool. So operators, they may stand up shared war risk capacity now and build permanent OIC reinsurance over time, some of which will be covered by Mr. Ahmed in a panel discussion. So the same logic, it runs through all 8. And of course, the priorities, they differ by region. So the view that you are seeing on the slide now, it has 8 options across region. So color is the lever, circle size is the depth of focus. So settlement and sukuk are heavy focus for the Gulf and Southeast Asia for obvious reasons. And because this is where the capability sits, the social and agri-finance buffers weigh towards the regions with greatest relief needs. So to close off, what we have seen and we have just demonstrated is that a concentrated dollar-linked industry took a real and tangible hit, and it was skewed to their disadvantage. And the answer could be to build resilience in settlement, the capital market, and risk pooling, all of which will be covered by our panel discussion. So the screen that you are seeing now, it's showing a QR code. So this QR code will take you to the dashboard, the full dashboard, which you can interact with. And this presentation will also be uploaded into that dashboard as well. So now back to Sister Iman to walk you through the rest of the proceedings.
Thank you. Thank you, Najmul and Mr. Rafi and Shikoh. That was a thorough walkthrough, especially the distinction between systematic impact, which hits within weeks, and the impact, which is built over quarters and shapes the outlook for the coming 2 years. Before we move to the panel, let me take you through how DinarStandard can support OIC governments and corporates navigating this landscape. As you've seen throughout this brief, DinarStandard supports OIC governments and corporates in 3 ways. Number 1, through consulting, vulnerability assessment, and strategic planning consultation. Number 2, our policy architecture function, the impact intel. It is DinarStandard's proprietary data intelligence platform. And number 3 is live signal sensing tool that tracks trade, investment, and policy shifts in real time. Moving on, and specifically for Islamic finance, our finance practice team, led by Syed Farouk, Rafi-uddin Shikoh, Connor, Clifford, Murphy, Atif Raza, and Najmul Haque Kawsar are glad to support governments, financial institutions, and corporates working through these strategic options. Contact details are on this slide for your reference. Before we proceed, please be reminded that you can post your questions in the Q&A box, and we'll get to as many questions as possible after the panel discussion. Now the moment we've been building to. I'm delighted to hand over to Rafi-uddin Shikoh to introduce our distinguished panel and lead the discussion on Islamic finance outlook for OIC countries. Mr. Rafi-uddin, over to you.
Thank you, Iman. Once again, everyone, it's a real honor to have you on, as well as I'm most delighted to have our very esteemed panelists on the call, and quite humbled that we have some of the top thought leaders of the Islamic finance joining us. First and foremost, I'd like to welcome Professor Dr. Muhammad Kabir Hassan, who is a professor of finance, and most all of you know him from University of New Orleans. He's also the Islamic Development Bank Prize Laureate. We also have, very honored to have Professor Dr. Mehmet Asutay. Really appreciate you as well joining, Prof. You're the director of the Durham Center for Islamic Economics and Finance, and also an Islamic Development Bank Prize Laureate. We have Ahmed ElBohy. He's the office manager to the Secretary General and the Economic Intelligence Strategic Reporting for AlBaraka Forum for Islamic Economy, which many of you are quite familiar with, a pioneering platform on Islamic finance and Islamic economy. And last but not the least, Monem, thank you for joining very early in the morning from Seattle. He's the director and portfolio manager of our very well known and respected Saturna capital. Welcome all of you, and again, assalamu alaikum. Ladies and gentlemen, as we start, I'd like to again request for all to the attendees that if you have any questions, first and foremost of Najmul and myself, in terms of what was shared, please put your questions on the board, and you can address it to any of the panelists, or even address Najmul. I'll even invite Najmul to be on the panel to take some of the questions, and we can answer some of your questions live as well. But most importantly, would like to start with our esteemed panelists, and I'll start with Professor Dr. Kabir. Professor, we want to have an interactive discussion, but I know you wanted to share some thoughts. I welcome your structured thoughts, but if we can keep it to 2 to 3 minutes as an introductory remarks from you, and then would like to go around with the other panelists so we can have everyone's view, and we'll come around. Again, we're open to taking everybody's questions. So with that, Professor Dr. Kabir.
Bismillahirrahmanirrahim. First of all, thank you for inviting me to join this panel discussion. So some of the thoughts that I had already has been presented by Najmul, so I'm not going to bother you with this. So when you talk about this thing, as Najmul said, so this is a geography shock, not just an oil shock. So there is largest supply disruption on record. International Economic Energy's characterization, Gulf output fell by 10 million barrels at the peak. Qatar agency declared force majeure on LNG. It is not only an energy or oil shock, it is also a food and fertilizer shock. Not the 20% energy that flows through Hormuz, that is also food and fertilizer that is impacting as well. And of course, as a result of the supply chain shock, the inflation has been imported all over the world. Not every country has been impacted the same way. It is also has been impacted differently. Now, if we look at what has the role of the Islamic finance in this thing, now, of course, very interesting, the negative view that Najmul shared. I have some other data which also says something about positive. During this time, IILM raised about $9.3 billion across 37 sukuk issuance this year. So the short-term liquidity raise kept working. And that also says that Fitch said that Islamic syndicated financing also gained momentum as issuers avoid public USD sukuk amid the war. because there is a deep market. They could go to the local sukuk issuance and so on. And the net foreign buying of GCC equities, by the way, in Q1 2026, a sharp reverse from the prior quarter net selling. So actually, instead of previous quarter 2025, last quarter, the buying was $1.47 billion. So there is a structural change that is happening because of the deepening of the market. Phase-based capital behave counter-cyclically. Domestic and Gulf Islamic investor observed issuance that conventional dollar markets would not price. The sukuk market had already crossed $1 trillion in outstanding, and that really helped. And what happened? So, and as a matter of fact, the report I was able to skim through that Mr. Shikoh has shared with me. There are 4 things that this crisis is the sovereignty thesis that they sort of talk about this thing. And what does it mean? It means that the 4 imperatives, and one is the institutional standard sovereignty. When halal and finance standards are fragmented, exporters pay more and import legitimacy from external validators. The Standard and Meteorology Institute for Islamic Countries now has 47 members and 56 published standards. That is the harmonization backbone. 2, capturing value from geography. The report phrase is a resilience premium. They talk about this report. The choke point sit inside our geography. That can be a curse, or it paired with credible institution and trusted governance, a source of pricing power. Third, converting demographics into productive power. The OIC hosts close to 30% of the world's youth. There is a dividend only if it is matched with skills, SME, and industrial policy in halal sectors. Fourth, building interoperable decentralized financial rails. There are more than 170 active stablecoins, up from only 16 a year ago. The lesson that you can learn is the interoperability across competing blocks without becoming dependent on any single source. Let me take the 2 imperatives from this crisis: geography and the supply chain. So we have talked about this, the issue, and who is in control of Hormuz, and that's going to determine. So geography actually being translated into the balance sheet item. So now there are 3 things. They told Iran imposed, Tehran imposed insurance, and Gulf Persian Strait Authority. So as you know, because of this uncertainty, the freight cost has gone up, insurance cost has gone up. So resilience premium is real, as mentioned in the report, and capturable. Markets paying for assured transit, storage, takaful backed mailing cover, and trusted arbitration. And these are severe OIC institution that can provide rather than import. And finally, the reconstruction as Islamic finance mandate, a $300 billion plus rebuild of Iran, plus Gulf hardening, is a natural sukuk and Islamic project finance pipeline if standards and governance are credible. I want to just run through one of these things. The report probably some other places. We do have a big
Dr.
problem.
Kabir, if you would allow me, I'd like to just make sure that we continue to get your perspective and go around as well our colleagues. So thank you so much for your initial views and your prepared remarks. They're very thorough, and you're always very well thought and obviously very analytical. And again, I see some questions coming, so please share your thoughts and remarks on Dr. Kabir's comments as well. I'd like to go to Prof. Mehmet. Thank you for joining from Durham. You're obviously a very seasoned a part of the Islamic finance ecosystem. As you commented to me or our group recently, that we talk a lot about the capital flow of the ecosystem, but rarely do we touch on the geopolitical related impact. What are your thoughts as a beginning set of comments on the impact of the crisis and our assessment that you've heard from us. And so we'd like to start with your opening remarks, please. Keep it 3 to 4 minutes.
Yep. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you. Thank you for having me here. And importantly, thank you for having such a political economy related topic, because in Islamic finance circles, unfortunately, political economy is something that we do not tackle. And hence the importance, because Islamic finance emerged as a result of a political economy search. But somehow we shifted everything to only the capital movements. Yet each time political economy hits us, and then we have to reflect how it is going. And this is a very important topic. It's a political economy issue, although it looks like a geographical issue, but it's beyond that. It's a global issue, and it's affecting every corner of the world. And Islamic finance, of course, mainly capital-oriented and coming from the region, has to tackle with it, have to respond to the issues, and have to look into how to accommodate the political economic problem that we are facing currently. But again, when we look at a fantastic report, I'm sure that I'm going to enjoy going to go through, and hopefully we can have you in Durham to present that as well. But what it shows, again, the Islamic finance, yes, resilient, but there are issues. When the global financial crisis happened, everyone jumped on the wagon that Islamic finance is resilient. But Islamic finance resilience then was related because the economies in which Islamic finance operates was not affected as much. In few cases, we could immediately see how certain Islamic banks were affected and the sukuk issuance was affected, but the general economy in OIC was not affected. So it wasn't the particular qualities of Islamic finance or the Islamic banking provided the buffer zone or the resilience, but it was the economies. But this time again, the economies, however, this time is being affected, because when we look at regardless of the nature, because we have quite a number of countries here, 57, each one of them has different capitalization and the different financial markets development. Therefore, the impact is quite different. When we look at, for instance, the energy crisis, yes, this is not only an energy crisis directly linked to financial markets as well, and then directly linked to real economies, because there are the oil importers as well. And therefore, for those countries, majority of the countries in the world, we have, including the OIC, the inflation, foreign exchange difficulties, and profit rate risk is something that is in front of us. But importantly also, which deals with the sovereign sukuk related issues, and which is an opportunity space at the same time, is the fiscal and the funding pressure. So fiscal pressures now, on the one hand, some countries may gain, oil exporters will gain more perhaps in terms of the price, but again, the volume is challenged. On the other hand, majority of the countries in OIC, of course, oil importers, and hence the fiscal and the funding pressure is an important issue. And therefore, Islamic finance response is very much important for us to look at. Of course, the energy part, on the one hand, is a source of capital. On the other hand, is a huge challenge for many countries in the region. So there is a momentum, as your result shows that, yes, in certain markets, depending on Islamic banking and finance, sukuk markets, the Islamic funds, mixed results. But there is a momentum. While the fiscal crisis that we see, of course, is a huge challenge, on the other hand, it provides an opportunity space for sukuk, domestic sukuk, domestic currency sukuk. And therefore, there is a momentum. But the problem, of course, we are facing is the shallow capital markets. Even in the GCC region, the shallow capital markets remain a challenge for us to be able to go forward. And therefore, looking into the industry, Islamic finance, I feel that can absorb the volatility that we are seeing only where the instruments are liquid and legally robust environment, and there are certain issues in many countries, and connected to real economy and the funding needs, real economic funding needs. And that brings us the issue that we are bringing again and again, how Islamic finance is Islamic in terms of profit and loss sharing, risk sharing, and connecting to real economy. When Islamic finance is exposed too much or the financialized heavily, unfortunately, financial crisis immediately hits. However, if it is real economy oriented, then the buffer zones. So that again reminds us the importance of the real economy part of the debate that we bring on the table always. And rather than entirely embedding Islamic finance into the global financial system, but embedding into real economy, I feel that it will provide an opportunity space for Islamic finance to gain. And therefore, looking at the impact, we have to look into higher financial market depth countries within OIC, and such as the GCC countries and some other countries, Malaysia, Turkey, and Indonesia, for instance. And these are the countries which deep Islamic hubs, and therefore local currencies, sukuk has an opportunity. Bank liquidity tools are more operative, and therefore hedging the risk perhaps can be easier. But on the other hand, the oil exporter countries such as the GCC and some of the North African countries such as Algeria, the revenue support exists because they can buffer up and provide certain buffer zones, but the physical export and shipping risk, of course, creates threats. But some other countries with the lower financial market depth, such as the import-sensitive large markets, whether it's Pakistan, Bangladesh, Egypt, Jordan, Morocco, and etc. Of course, the inflation. And some of the other countries, of course, facing inflation, such as Turkish inflation, is something that is remarkable. Inflation, the reserves and the subsidies, remittances, of course, being affected as well. And the food import bills drive the financing needs and therefore perhaps an opportunity space, but also the squeezing of the Islamic finance markets. But other countries with the lower financial market debt, at the same time, higher energy importers, of course, they feel the real heat of the issues, whether Islamic finance in those markets. Anyway, those are the countries where Islamic finance is still very niche, and therefore the challenge for Islamic finance to exist within that. And therefore, yes, the outlook is not gloomy, but it is not perfect because we are moving from growth era into resilient era again. But again, that reminds us the importance of the internal Islamic finance qualities or the principles of being embedded in the real economy and providing opportunity spaces for real economic activity rather than the financial, and hence perhaps moderating the consequences through being embedded in the real economy. Because we do not want to come into, again, the importance of waqf and zakat. Of course, these are amazing institutions, but we cannot leave the livelihoods of people just for zakat and waqf under the current regime. The capital movements have to look into such aspects if it was embedded in the real economy. I'll stop there. Thank you.
Thank you, Prof. You touched on many critical points, such as the importance of resilience and the focus moving from growth to resilience, and the importance of real economy underpinning that creates a buffer, building on some of the points that Dr. Kabir also mentioned. Speaking of real economy, let me invite Monem. Monem, Saturna, the largest Islamic funds globally, with exposures, I would say, in many of the OIC countries as well, with your anchor in Malaysia as well. Can you speak to your thoughts on what you heard about the analysis so far, both from Najmul and Professor Kabir and Professor Mehmet, vis-a-vis Saturna as well? Thank you.
Sure, thank you. Assalamu alaikum, everybody. Bismillah, alhamdulillah, salatu wassalam. Rasulillah, an important topic to think about and talk about. But I think also sometimes we get caught up in the economics and politics, and we have to just take a moment sometimes to just think about the people that are suffering in this crisis as well. So I think it's important to be able to mention that. I think generally, I think both, I think both the professors really talked about was the balance between, there's the risk and the opportunity. And I think that's really where opportunity lies within Islamic finance. When you think about it, there's going to be a lot of now re-infrastructure spending as people think about, or governments begin to think about how they're going to reposition themselves in the new world order, as you had mentioned in one of your slides. There's going to be a new normal. And that comes with it a lot of ramifications, whether it be on the oil side, whether it be on energy, whether it be on inflation, or even sometimes even political turmoil. And we can get into each of those a little bit later. But I think where there is that risk, there's also that opportunity. And the opportunity is for Islamic finance to be able to take the lead in being able to offer solutions to not only the funding of these projects that'll probably come about, but also at the same time to be able to build that depth within the economy and the real economy, as Professor had mentioned in the previous comment. So I think that's really the overall situation. I think each country is very, very specific as to what they need to be able to do to be able to get that let's call it sovereignty away from this idea, the globalization. There's so much dependency that one disruption really can cause this much of a problem around the world. So whether you're looking at in the GCC has different set of issues and different set of opportunities for investments than maybe Southeast Asia versus Africa or versus North Asia. I think combine this rebuilding that's going to be happening with already the infrastructure building that's happening with AI and the data centers, and what you're going to get, I think, in the long run is also going to be a lot of supply shocks for parts material and those things, and that generally will cause inflationary pressure to continue in the markets.
Thank you, Monem. And I'd certainly we'll come back to you based on your thoughts, and you're right. There isn't each country, not just even the region, is affected differently, even when it comes to the Islamic finance ecosystem, by virtue of their nature of the operation of the economy and how Islamic finance is anchored there. Inflationary pressure, again, a hot immediate impact situation that has a domino effect to the industry as well. One of the key areas that we not really emphasized, but as any crisis happens, get affected, is the insurance premiums, or takaful, the role of takaful. And this is something that in our discussion with Mr. Ahmed ElBohy, who is representing AlBaraka Forum, he's a PhD, very astute student and a practitioner of Islamic finance. Would love to hear his perspective overall in context of the role of insurance premiums that the ecosystem is also having an implicated impact on. Ahmed.
Yeah, thank you, Brother Rafi. Thank you for having me and having AlBaraka Forum in this session and discussion, and rich discussion. The point I want to make is simple. The crisis didn't show that Islamic finance is weak or declining or something like that. What it showed is that the Islamic finance sector is still severely underdeveloped in the sector of takaful or insurance in large. Solvency was not a central problem at any time of the crisis. The sukuk spreads widened in March and returned to its pre-crisis levels in June, maybe. The real constraint was risk transfer, which is the least developed function of Islamic economy. Some analysts actually argue that what closed the strait before any military operations is the high insurance premiums which have been put on the region due to the risk of war. I think we can agree that binding variable was risk transfer. This should concern the Islamic finance directly, because actually takaful, our cooperative model of risk sharing in the Islamic finance, is about $136 billion in a $6 trillion industry, which is about 2%, I think, or something like that, which is very, very small. And if this is a state of the insurance or the takaful industry itself, the primary market, you can imagine the condition of the re-takaful or reinsurance market. It's severely underdeveloped and it represents a very tiny margin, a very tiny fraction of the conventional reinsurance market worldwide, which actually is a very vulnerability in the sovereignty, because many takaful firms or institutions, Islamic insurance institutions, will have to cede its risk transfer function to a global or conventional reinsurer in Europe, in London, in Frankfurt, which is conventional reinsurance, which is the function which takaful was invented actually to evade. So we are actually ceding our risk transfer to what we were escaping from. This actually represents a very structural weakness in the Islamic finance industry as a whole, as Professor Asutay has described the social failure of Islamic economy, and Professor Kabir Hassan also described as its tendency towards form rather than substance. The industry actually, as AlBaraka strategic report that we have launched in June, this June at our Istanbul summit, it shows actually that over-reliance on debt over risk sharing is the defining structural weakness in the whole sector. This is an opportunity, as Brother Monem has mentioned. It's a risk and also an opportunity, because conventional insurance itself actually have developed during a catastrophic risk that have been faced by Europe. The Great Fire of Hamburg in 1842 exposed that weakness, and 4 years later, the first modern reinsurer was created. So we can use this risk that we have all witnessed actually to push through making re-takaful or the Islamic reinsurer industry more strong and more structural, more infrastructure than just a primary market. That's my take, and thank you for having me.
Thank you, Ahmed. All right, you've touched on an important area of the ecosystem, which is takaful, and its underlying mechanism that enables further support to a resilient ecosystem and supporting in its purpose. Let's do this. We have about 10 minutes or so. Again, I encourage you to for the audience to ask questions. If I can have Najmul on, and Najmul, if you can share the strategic options that you had shared. I'd like to just have our panelists look through this, because as we discussed, in terms of the purpose of our presentation was to not just evaluate the vulnerability of Islamic finance ecosystem. And I really appreciate, Monem, you highlighting the point that, in all of this, first and foremost, we have to, pray for, and we have to recognize that there's a lot of human suffering, and if we get to the purpose of Islamic finance and maqasid in that context, we have to look at the role of Islamic finance in aspect of alleviating the suffering. So first and foremost, du'as and to all those who are suffering in this, and we pray, may Allah grant peace to the Muslim Ummah as well as the global ecosystem in a way that is ethical and aligned with our values, inshallah. So I'd like you all to, as panelists, look at this assessment of what we had identified as some strategic options. So we talked about the vulnerabilities around, inflation pressures, refinancing pressures, war risk capacity gaps, the concentration of assets, settlement funding, run on dollar in terms of the rails, and currency pegs, etc. But in terms of what are the strategic options, and I think some of you touched on a lot of these points. We talked about risk management. We talked about resilience, integration of OIC vis-a-vis social buffers, industry, real economy support, agri-finance links. So these are the 8 strategic option areas that we had highlighted. If you would pick, each of you would pick one area that you think as a strategic option is critical for the ecosystem in medium and long term to enable a more resilient OIC economies or the industry, that would be great. If you have another one that you think, no, none of these 8, I have another suggestion or area that you think that the industry and ecosystem needs to focus on. So if I can just give you another 30 seconds, and again remind that we have more questions coming in, and I'll try to get to this. But let's keep it short. If I can start with Professor Dr. Kabir, I know you have to drop off too as well, please.
Yes, so just one point, if you ask me, I would emphasize the harmonizing to de-risk the trade. What is happening, and you have a segment in this report, the halal economy, but only 3 countries actually produce the 20% of the total halal trade, and the rest of this coming from other countries. And one of the problems that I face is the standardization. And OIC has it called SMICC. The standardization certificate should work every country whenever the supply chain is disrupted, so that standardization can create a value chain for the Islamic finance through the halal industry. So that would be my one point. And if you're excuse me, I have to leave.
Yeah, thank you so much, Professor. And you'll be glad to hear His Excellency Ehsan Uvet from SMEEC is actually on the call. So inshallah, the message gets to him. And I think it's a very important thing for the Islamic finance industry to recognize that the real economy halal industry sector, which itself is multi-trillion dollars. And we have the report you were referring to is our annual State of the Global Islamic Economy report, over almost $400 billion of annual trade. It's an important connection point with Islamic finance. But thank you again, Professor Dr. Kabir, for joining us.
Thank you. Assalamu alaikum.
Alaikum salam. Professor Mehmet, your thoughts?
Thank you. I think one political issue or political economy issue, the dollarization settlement. Of course, that's a whole political discussion, and in particular, considering the currencies in the GCC region pegged to dollars, I don't know whether there is any willingness in the Muslim world or any political will to be able to challenge that, but that will be an important starting point. But in terms of economy, the agri-finance link, Islamic finance entirely lost that link. And economies in the OIC countries are suffering with the food security. Even countries such as Turkey, which used to be a self-sufficient economy 10 years ago, now is a net importer of food. And that gives us an amazing opportunity space to re-bring the importance of productive economies to agriculture in addition to manufacturing, and also Islamic social finance buffer. I'm not happy with the social finance terms because it includes financializes zakat and waqf, but Qard al-Hassan funds are important for us to consider. And then Islamic social welfare institution, zakat and fund, but zakat and waqf, but that area has to be kept away from the hegemony of state, has to be in the civil society, because states are tapping into using for their fiscal deficits as a cheap credit. It has to remain as a negotiative power of the civil society to be able to empower individuals in the field. Thank you.
Very, very powerful comments, Professor Mehmet. I think each of your points deserves a whole discussion on its own. And as you rightly said, some of these things are, are a matter of political will. Although I would say there across the OIC, there are discussions around this, as you know, across some of the ecosystems, and there are other mechanisms. I'll move to Monem. Your thoughts?
Yeah, so I think I'll pick the inter-OIC capital market integration. I think, over the next few years, because of exactly what's happened, there's going to be 2, I think, massive infrastructure build-outs that are going to take place. I think number one, you're going to be a lot of countries are going to be thinking about how to reframe their strategic petroleum reserves. And that actually takes a massive infrastructure build to be able to build that out. It's not an overnight process. It does take billions of dollars to be able to do. And it takes years to do it, but it probably will get sped up. The other one, the part of the infrastructure, part of that strategic petroleum, is how countries really think about import and export and what they're actually doing. I'll take the example of Malaysia, for example. Malaysia is a net exporter of oil, right? But even during this crisis, their local economy was suffering because oil prices were high. Now you wonder why that's the case, because what they actually do is they only refine jet fuel. They don't refine for common cars or diesel. And so they were importing diesel, costs going up, and they were exporting out the actual jet fuel. And so those type of things will have to be rethought about. And when governments do that and they need to build that out, that is going to take some capital market integration, because not all the money can come from only the Southeast Asia. It has to come from the Middle East. It has to come from different parts. The second one I would talk about from a large infrastructure build out is going to be energy security as well. You're looking at not only where your energy comes from, but what alternative sources you might be able to use to be able to do that. Whether it be hydro, whether it be nuclear, whether it be anything else, solar, that will take a lot of infrastructure build out as well. And the Islamic finance basically stands in a fairly unique opportunity to be able to be at the crosses of both the environmental side and the Islamic side, or the ethical side, to be able to provide the financing through sukuk to be able to build these things out. What I think people should think about, me as an investor, I think about these things quite often, is where there are opportunities. And I think really in all of this is the opportunities are going to be in the picks and shovels of this, in the build out that's going to happen. Right? Where is it there are going to be the supply shortages? What companies are going to be providing it? And where do you invest to be able to take the most advantage of being able to do that?
Great. Monem, you have your ears on the ground, obviously, as a major investor and with a stake in the OIC markets. You made a point about the intra-OIC capital market integration. Just as a quick follow-on, do you see momentum in that direction? I know you said it's important, but do you actually see momentum in that direction?
Not as of yet, I do not. And I think that's something that needs to be worked on more. I think there was some momentum probably, I would say really about seven to 10 years ago, but I think that's kind of slowed down a bit. But I do hope that this actually kind of speeds it up even more. As crises sometimes do, they make people kind of react. And a lot of this, I will say, I mean, right now, we're in the midst of the crisis. So I think a lot of this will play out as things develop down the road. And I think one of the focuses of it that's going to have to be is how do we kind of integrate these capital markets.
Thank you, Monem. Ahmed, I'll come to you, and I will also ask my fellow panelists, esteemed panelists, please look at some of the questions because we will be running out of time. If you can answer, Professor Asutay, there's one directed to you, but others as well, Monem and Professor Mehmet, if you can look at it. Ahmed, your thoughts on from this?
Oh yes, of course I would focus on the option number 5, takaful war risk pool, which was actually my continuing participation, and I would add some comments to that. Actually, you were right that the GCC is the strongest region in this sector. But I would also add Southeast Asia, because Malaysia have a very strong and developed takaful and takaful market. So we don't have to make a huge treaty incorporating all the 57 countries of the OIC. We can make a core agreement between the Gulf states and Malaysia, who are the actually markets which are developed in takaful. And they can make this pool, and they can actually launch this very politically heavy endeavor. They can be convinced after the crisis to do this, and it can be done. It would require multilateral negotiations and convening many players. It cannot be done by one actor or one type of actor. It would have been it should have be a cooperation between different sectors, public and private, governmental and non-governmental. The takaful market is also have a very fundamental weakness, which is it's hugely fragmented. It has to be consolidated. The private sector have to be allured into entering this field of takaful and risen in awareness of its benefits and profits, because Private sector actually prefer conventional insurance because they can see the benefit, the profit right away, but they cannot see how a cooperative insurance can be profitable actually. So this can be discussed with them. The sector can grow slowly but surely, and it should be started now than later because as your dashboard have shown that the crisis haven't actually ceded or ended, and it could renew and it could escalate more and more. Thank you very much.
Thank you, Ahmed. And a very important area, and I want to congratulate AlBaraka Forum for not just convening the thought leaders and the influencers and the decision makers across OIC and globally, in fact, but also driving some of the thought leadership, and look forward to hear further. I know you referred to some of the reports now AlBaraka is also producing. We'd also love to collaborate on some of these specific topics that each one of these require us to help bring to light for the industry. All right, I know we're out of time. I really want to thank all of you. And Monem and Najmul from our team, who's a NCF alumni, mentioned he often recalls fondly you giving khutbahs at NCF. So not to put you on the spot, but would really welcome if you could help close this gathering with a dua. Both for the barakah of this proceeding, but as well as the crisis that the world is facing. So if you're okay to help us close with a dua. Before that, if I can just ask Iman if there's any logistics-wise we need to share, we can put up on the screen any next step, because this report is available to download. We have this interactive dashboard, but the presentation that was presented will be added later I think by tomorrow, as well as you will all get an email. So here you go. I've already communicated that closing remark from our side, Monem. So if with that, thank you, Professor Mehmet, Mr. Ahmed, Monem for joining, and all of you. We'll have Monem, is that okay?
Yeah, sure.
Okay, Bismillah.
Yeah, Bismillah. Bismillah ar-Rahman ar-Rahim. Allah subhanahu wa ta'ala, we ask you to be able to open our hearts and to be able to alleviate all the suffering that's going on in the world, especially in the current crisis that we're facing. Those people that have been forgotten about, to help us to remember them, to make dua for them, to aid them in whichever way we can. Allah, we ask you to be able to open our hearts to your deen, and make us of those who are constantly in remembrance of you and constantly in remembrance of those that are suffering. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار. اللهم صل على محمد وعلى آل محمد كما صليت على إبراهيم وعلى آل إبراهيم في العالمين إنك حميد مجيد. اللهم بارك على محمد وعلى آل محمد كما باركت على إبراهيم وعلى آل إبراهيم في العالمين إنك حميد مجيد. O Allah, bring comfort and justice to all those that are oppressed in the world, and deal with the tyrants with your perfect justice. سبحانك اللهم وبحمدك وأشهد أن لا إله إلا أنت نستغفرك ونتوب إليك. بعد أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا الصالحات وتواصوا بالحق وتواصوا بالصبر.
Jazakallah, thank you so much, and thank you once again. Iman, any last words?
No, thank you. Thank you, Mr. Rafi-uddin and our dear panelists. And thank you, Brother Monem, for your lovely dua. May Allah accept it from us. Thank you, everyone, for joining us today. And once again, the brief and dashboard remain accessible via the chat link. So please explore and share it widely. And brief number 4 on retail and textile is coming next. So please stay tuned on the upcoming announcement. Thank you all once again, and see you at the next roundtable.